Hi everyone, let's have a look at my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario, where this is a move towards the upside in a wave 1 or A, followed then by a corrective structure to the downside in a wave 2 or B, after which we then expect continuation to the upside in either a wave C or a wave 3. Now if we then look at the lower time frames, and we will go into the micro in a second, then this could potentially be the low of a wave 2 or a wave B, but you can see price moving to the downside. We have some bearish divergences here as well, so we have to wait and see what price is going to do. We still have a support area below price that is still untouched between 25.6k and 25.9k. Now currently price bounced on the golden pocket Fibonacci, taken from the low to the high of this move, this impulsive structure to the upside. And besides the golden pocket over here, we also had a 15-minute little order block. Now it's not the greatest support, to be honest. That's also the reason why I didn't have a target box in this area, but the golden pocket area is always an area to at least keep into mind, keep into account. And after this bounce over here with price moving up and down, we also started to build some bullish divergences which have already played out. So now it's up to price to wait and see what's going to happen. And we still have the bearish CVD divergences that have not yet played out, but more about that in a second. So if we look towards the upside for then potentially already a continuation for a wave C or 3, then as it stands at the moment, if we pull the fibs from the low to the high to the current low over here, then these are the targets for a wave C between the 1 and the 1.236, which is between 28.2k and 28.7k, which is actually right in between the two target boxes. And for a wave 3, you want to see a minimum target of the 1.618 being hit, which is currently sitting at 29.6k. If we then go to the bearish scenario, then the corrective structure is not yet finished and we expect more downside. This then to be a potential 3-wave move and then a bigger wave A, which is an expanding flat. Now this scenario is an alternative, gotta say, mainly because this wave C over here, this impulsive structure, is very long compared to a very short and tiny wave A and a wave B. The most, or actually a rare target for a wave C in an expanding flat is the 2.618, taken from the low to the high of A to the low of B. And this is already a rare target. The common target is like down here, but as you can see, price just pushed through, not respecting even the rare target. So that's the reason why this scenario is an alternative, where if this is a wave A, we can potentially expect a wave B to the downside, where still there is the opportunity for this low to be taken, hitting the yellow target box between 24.8k and 24.3k for then an impulsive structure towards the upside. Now as it stands at the moment, if we look at this potentially being a 3-wave structure, then we can look at this potentially being a WXY at the moment. And if we then look for the targets of a WXY, then let me quickly put the target of a WXY on the chart. The 0.618 is one of them. Then the most common target area is between the 0.618 and the 1.236. Now preferably we have the blue target box over here. This is going to act as the main area as support, maybe wicking into the 1 over here, but the 1.236 is basically at these lows, and that's of course something that in the bullish scenario you don't want to see, but in the bearish scenario it is possible. But then again, the most common target area is over here, and we're hitting this yellow target box. It's going to be the rare target for a wave Y, which is not something I expect. So most likely price recovering, or at least continuing to the upside after bouncing in this area in this particular scenario, which then means that this can still be a 3, and then you expect another 3 towards the upside in this particular scenario. If we then go to the micro bearish scenario, then this is actually quite interesting, and I might have to go to the 5-minute over here, where, oops, we got to zoom in. This move towards the downside is then a 3. This is a very sharp zigzag over here, followed then by another 3, so a WXY over here, and then a bigger W, followed then by a wave A sideways WXY in a wave B, for then another impulse 1, 2, 3, 4, and then a wave 5 to the upside in a wave C. So we have an A, B, C wave move in the green X over here, for then a W, X, now expecting a Y towards the downside. And if we look at the target area for this wave C, taken from the low to the high of A to then the low of this wave B, the 1.236 and the 1-to-1 has, as you can see, been very nicely respected. Yes, price is wicking above, but that's no problem. Candles closing inside this area, nicely respected for then a move towards the downside. That's exactly what you want to see. Now you will see that on the lower time frames, I've been quite busy with this move to the upside because this is in a wave A scenario, a leading diagonal. So you could do something like this. It's still a red line. Let me make this white. So there you go. And then we have a 1, 2, 3, 4, 5. And what's interesting here is that it actually respects the rules of a diagonal as well, where you have then a big wave 1, 2. Wave 3 is shorter, hitting the most common target area for wave 3 in a diagonal, which is the 786, 886 area. And then the fifth wave over here is respecting the rare target and the minimum target for a diagonal wave 5, which is the 0.5 taken from the low of 2 to the high of 3 to the low of 4. So that is actually quite nice as well. And then a leading diagonal, after which we then get this longer sideways corrective structure in a WXY, which is then a 3, 3, and then another 3-wave structure. And then over here, we started building some bullish divergences again for then this push towards the upside. Now, in this scenario, the invalidation is if price is going to go back to the upside at 26.8K. One can imagine that if this high is going to be taken, higher prices are definitely on the cards. But if price is continuing to the downside, then this area once again is going to be a very, very interesting area, with the blue target area being the main area of support between that 25.6, 25.9K. In the bullish scenario, the low is already in. So in this scenario, we then have again the WXY, where for a wave Y over here, and this is being a WXY, the most common target area is between the 0.618 and the 1.236, taken from the high to the low of W to the high of X. And you can see that this low has been made inside this target area, which is then absolutely fine. And then this is a wave 1, followed then by that sideways wave 2, and then potentially another 1, 2, for then a bigger 3 towards the upside. In my opinion, this scenario is then invalidated the moment this low is taken. And currently the targets for a potential wave 3, well, the minimum target for wave 3 usually being the 1.618 is just above price, just above this wick at 26.9K. So price has to hit this, in my opinion, for this to be some sort of alleged 1, 2, and then a bigger 3 towards the upside. So yeah, volume did increase when price was moving to the upside over here. But that can also happen with a wave C. So we have to wait and see what this drop is going to do, as we also have a bit of bearish divergences going on, which I will show you right now actually, because this is basically the micro bullish scenario and the CVD divergences. So this is actually what's been going on. So we have a bounce over here on the golden pocket, as you remember, price moving up, moving down, creating bullish divergences, and the target for these bullish divergences was this high over here, as explained in my CVD educational video. Check the end screen video coming up later, and the target was hit over here. Perfect. Then we have this currently as a bearish CVD divergence, lower high on price, but a higher high on the CVD, where the target is this low. Now, preferably, I like to see CVD divergences after the most recent high or low, meaning I prefer to see something like this and then bearish divergences, as then this structure over here is made after the most recent low. So instead of having bearish divergences with an in-between high or low, because this high over here is for me in between a high and in between the low, it's like in the middle of a structure to the downside, I prefer to see CVD divergences with the actual high or low. So if we have an actual high or low here, price then moving down, up, and then bearish divergences, that for me is more powerful than these type of bearish divergences. But nonetheless, they can play out and should be taken into account. And if I go into more detail, this is what happened on the 5 minutes. So this is the move towards the upside without the drop that we have at the moment, as I took this screenshot in preparation of this video. So here we had the bounce moving up, down, bullish divergences. You can see the green lines. Please let me know if you prefer me doing this, because usually I go to the live AGGR chart with my cursor, but now I actually made a drawing. So please let me know in the comments if you prefer this, so you can actually see the lines and the divergences. So a higher low on price, lower low on yellow and on blue, bullish divergences, but these have played out. We had some bearish divergences over here. The first bearish divergence actually played out, the smaller one, lower high in price, higher high on the CVD, played out as price took this low over here. So that's absolutely fine. And then the second bearish divergence, so the other one over here, lower high on price and then a higher high on the CVD, That one actually just missed out on playing out, as it didn't take these lows. So that was maybe a sign to come. Bam, price moving up, price moving down, CVD neutral, but then it moved up here, moved down, and again, bullish divergences on both blue and the yellow line, and then price moved up, and then a 1, 2, 3, potential 4 over here, and again higher low on the 5-minute, lower low on the yellow line, pushing to the upside. So we saw some bullish divergences during this move towards the upside, and in the more bullish scenario, you want this then to be a wave 1 followed by a wave 2, and then a bigger 3 towards the upside, right? So this structure over here can still be a corrective structure and not necessarily has to mean we go to lower prices. And honestly, preferably, if we look at this structure over here and we look at time, as mentioned in the low time frame scenario over here, the low time frame bullish scenario, then wave 2 or wave B ending in between the 1.618 and the 2 fib time is actually quite nice. I do think if price is going to go down now, again, it is a very long wave 2 and wave B, which is not preferred. It is possible, yeah, it is possible, but this would be nice. It fits in between the nice Fibonacci times as well. So we have to wait and see, of course, what price is going to do more locally. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'll see you at the next one. Bye bye.